Hello everybody. Welcome back. Welcome back for another video. Hope you're all doing well. Hope that everyone out there is doing just fine and that you're all having a great day. Don't forget to follow me on social media. There are links in the description box below the video. And without any further ado, let's jump right into it. Some really, I guess, more or less kind of normal-ish. There is one weird thing actually happening right now, but that's maybe neither here nor there, happening within the cryptocurrency space. This one, I think, is more or less to kind of be expected. If you haven't been here or haven't been paying attention, staking is becoming a very big feature of the cryptocurrency space. This kind of has been a thing for a few years, but I do think that one of the main catalysts came about last year when Michael Saylor first called Bitcoin boring because it doesn't produce anything after itself. It rises in price, it falls in price, it goes back up in price, but there's not any passive income from it. Not that there needs to be, but with the way that the world is now and a lot of the investors moving into the space, the idea of staking passive money and a yield is quite popular. Ethereum has gained a lot of attention this year, and I can really only logically assume not just because it is the second largest chain. I think it has to do with staking already lightly being baked in. It is a core feature of the protocol now. This idea of basically absorbing the second largest coin while its price is still dramatically low compared to where people keep telling us that it's going to be. And then it basically making money for you is a huge, thumbs up. Many ETFs, many other funds, they provide some kind of a yield for their holders, people who are holding on to said financial product. We went over that before. When it comes to the idea of even having money in the bank, we have been trained in a way to kind of assume if we are holding on to an asset, it has to be cash producing. The same exact thing with real estate. I'm not just going to buy an apartment and not have someone inside of it producing cash for me. That's the general takeaway. So, cryptocurrency asset manager, they are called Grayscale, is once again in the news. Apparently, they are preparing to stake part of their massive Ether holdings, a move that could signal confidence that U.S. regulators will soon permit staking within exchange-traded products. If you weren't here, this is since around January, maybe even February. Grayscale, BlackRock, Fidelity, and others filed paperwork with the U.S. SEC to get a rule change to basically add the word staking into their products for said cryptocurrency ETFs that they have that already include staking in some form or manner. This was around the same exact time when they were trying to first initiate the in-kind redemptions and in-kind pay-ins, where if you wanted, I want some Ethereum ETF, you'd be able to pay in with Ether. And then if you decide to take profits or cash out, you would be paid in Ether as well. It's a big, gigantic turning point. The other part has been for staking. There's a lot of interest, I'm sure you've seen, in Bitcoin ETFs and Ethereum ETFs and all the other ones that are expected to tumble out over the next couple of weeks and or months. The biggest factor is you normally want to be able to say, not only are we expecting Ethereum to go to $45,000 per coin, but you're also able to make passive income that we will give you all the time from just simply holding this ETF. And I wonder how this is actually going to work out, because normally much staking within the cryptocurrency space actually happens daily. So many people are used to getting dividends from their stocks, maybe once a month, usually once a season, every 3 to 4 months. There ends up being some kind of a payout of said dividend. But many crypto protocols do like a daily, like you get your money from staking it every 24 hours. So I don't know if these are going to be 24-hour payouts, but it's probably going to be monthly or somewhere around there. On-chain data from Arkham Intelligence showed Grayscale transferred more than 40,000 Ether. Activity consistent with positioning for staking rewards. Arkham noted that if confirmed, Grayscale would be the first US Ethereum ETF sponsor to stake their holdings. They could just honestly be doing it with their own money, but a lot of times, and this is a double-edged level of sometimes stupidity and logic baked into one. Sometimes companies will simply move their coins to another wallet and people will panic. Some people will think, well, they're moving it to sell it. They're moving it to do, so and so. Why would you be? In many cases, it's just the company. You probably don't want to have 784,000 Ether just in one wallet. You might not even want it in 10 wallets. You might want to do something else with it. This was also an issue and will continue to be an issue. I just saw something. People were looking at the addresses, like the wallet addresses of Ethereum Foundation members, who for some reason their addresses are public. And people were looking. I think one of the people who works for the Ethereum Foundation, I think he recently sent was like $6 million worth of no. One was 2 million. Someone moved it to another wallet and people panicked. Okay. And then someone else sent 6 million to Kraken. The initial thought from all these people was that this person is going to cash out and drop the price. I swear to goodness, if people don't learn what liquidity is, like we're all lost. We're not going to make it at all. When you talk about, a market cap of 200 billion US dollars, if someone's selling off $6 million is not going to shake the markets at all. You know what does? Is people posting comments and going on Twitter and writing articles talking about that an Ethereum Foundation member just sold off their own money, which I'm going to get to in a second. And then the idea of them selling off their own money must mean that something's wrong with Ethereum, something's wrong with the protocol, something's wrong with the so-and-so. And this then causes other people to sell off. Well, that person works for Ethereum and they're selling. I should also sell. And then the price drops and the people go, see, we knew something was wrong. No, it's because you all listened to stupidity. Once again, you literally followed the leader into the canyon. These people have tons of money. I think it's very weird that so many people in crypto follow these people because they are rich and at no point think that they're going to sell off their coins or that they don't need 6 million to buy a new home or an island. You know how many times it's crazy. If you've never been into stocks and stuff like that, and I once again, crypto is usually the doorway for many people to get into finance. A lot of times, so like the last couple of years, you might have seen news stories like Jeff Bezos just sold, $280 million worth of Amazon stock. Is something wrong with Amazon? When you're a large shareholder or a CEO or a former CEO, usually I have to actually tell shareholders in advance, hey, I own 3% of this mega $8 trillion company. I plan on selling off some. And they go, cool. When do you want to do it? And they usually give you like a timeline. You can even say in a year. Sometimes it's less, but let's say a year for simplicity's sake. And then what happens is these larger shareholders all find out about it. And then they usually tell the public this person is planning on selling off some of their stock so that they can do whatever they want with their own money. But when it happens, people usually, like, outside of the money sphere, tend to get quite upset. Why is he selling? Why is he dropping Amazon? Because it's his money. Everyone in crypto is so fascinated by other people's money and how rich they are and what they can do with it. But when they decide to do something with their money, it ends up being a negative issue. I'll never understand it. It's such a weird thing. People think that people should never take profits. You have to hold on to your crypto forever. There was just someone recently, they shall not be named, who was telling everyone to buy. I mean, this new meme coin popped up and they told everyone to rush into and buy this coin. And then people found out that they sold that coin the next day, I think the entirety of their holdings, and then they bought a new Ferrari. And it's like, what the like it's just so weird being in this market. Everyone is just like, I don't know, dude. I sincerely don't know. Here's the actual post from someone named Emmett Gallick. It says, breaking, Grayscale is preparing to stake their ETH holdings. They moved over 40,000 ETH in the last hour as they position 1.5 million ETH for staking rewards. They are the first Ethereum ETF in US markets to do so. They might have just been moving this for the sake of moving it. And I mean that in complete honesty. This happens quite often. Remember when Vitalik, Vitalik and all the original Ethereum creators have a large amount of ETH, and they've been buying more since, ETH was 50 cents and ETH was $1. They increased their holdings. But the problem is that their wallet addresses, they made them public years ago for like transparency reasons when they didn't have to at all. It wasn't, if everybody wants to be private in crypto and have their own space, so whatever. And then at some point, these people end up making new wallets. Wouldn't you believe it? But the problem is that when they move their money, that new wallet also becomes a topic of discussion. Why did he move it there? What is he doing? Why did he do so-and-so? So what many of these companies, these institutions, these, creators now do is they actually send their money to crypto exchanges. Do you know why? Because it actually goes into a pool of money. All the ether is kind of there at the same time. So when they do withdraw the money from their own account, you can't tell which new account it goes to. Why the heck would anyone want you to know where their 185,000 ether is at any given time? Are you posting your bank account details online for everyone to be able to see exactly how much money you have and when you're sending it, when you're using it, and when you're buying something? So yeah, these will all be a thing. I especially, and I'm taking the words from the new SEC, who claim to be as crypto friendly as humanly possible. This is going to be everywhere. We're going to have crypto staking in every single ETF. I don't think they're going to hold back. It's just, once again, a matter of which ones actually become popular. There are tons of coins who are vying for some kind of a position in the spotlight, and many of them are probably not going to make it. That's the Grayscale moved money news. Wow, how crazy. I would have never expected that. Okie dokie. Let's move on. Also in news, it's not popular news, it's news. So we have had a short, long-standing tradition of companies announcing that they're buying Bitcoin, and then companies announcing that they're buying Ethereum, and then that kind of kicked the floodgates open because companies announced we're buying XRP, we're buying Dogecoin, we're buying Litecoin, we're buying Binance Coin, we're buying Tron, and there was one other, really, I forgot what coin it was, and it was like, really? You guys are putting $1 billion into that? Okay, why not? So on that journey that we're on all together, there's a brand new coin trying to make its way into the spotlight. I don't think it's going to work out for this one. That's not it's just more realistic. This coin hasn't been in the news since like 1983 or something like that, and no one's really talking about it. No one's really using it. No one's talking about a treasury for it except for these people, which will make it even weirder when I tell you what it is. Avalanche, the coin Avalanche. The Avalanche Foundation is apparently in advanced talks to set up two U.S. digital asset treasury vehicles to raise roughly $1 billion that would purchase millions of Avalanche tokens directly from the foundation at a discount, according to the Financial Times. So, the Avalanche Foundation is trying to get other people to set up $1 billion deal to purchase Avalanche tokens. Two, the other really weird part is that we've heard this one before, not from Avalanche, but there's whatever that other coin was. They had literally set up their own other foundation. Like they made a new company and said, hey, look, that company's buying our coin. So what has happened many times before in the cryptocurrency space, and this is just history. Sometimes many coins, you know how like years ago there was like a huge thing surrounding cryptocurrencies that were, or coins or foundations or whatever, who were, partnering with the company. We just partnered with this company and they're going to be using this coin. We just partnered with this company and they're going to be using XRP for this. We just partnered, that kind of thing. There were certain coins within the space, and you don't hear about them anymore because that's how lies work. Years ago, who announced that they had partnered with these companies, and we just got into partnership. We just partnered with this company, and then it not even leaked. It was kind of public that these companies who created these coins, someone like their CFO or someone higher up in the company, created another company. They were still working for the first company, but they created a new entity, and they said, and then they partnered. So imagine it's you and your family, and for the sake of this, it's you, your brother, your mother, and your father. For the sake of argument, cool, awesome. So you're all living in the exact same house, and then at some point your mother says, you know what, I think I want to move. And she moves across the street. And then your father decides to move, and he moves to the house like right directly, next to her. And then at some point you make an announcement that you have formed a partnership between three houses. And it's even the last weirder part is that your parents bought other homes that are across the street, but when they go to bed, they go back to the house where they were before, and all four of you end up sleeping under the same roof. You understand? So a lot of times before, we have heard that, now that we have so many things about these foundations, a foundation trying to get other people to buy their coin is usually like you usually have, independent companies, or you have like mattress dealers, or the people who do nails who started buying Bitcoin. I mean, like really all these things. So it's a bit weird. One vehicle led by something called Hive Mind Capital would seek up to $500 million via a NASDAQ-listed company with Anthony Scaramucci advising. A second, sponsored by Dragonfly Capital, would be a $500 million SPAC. Cool. Yeah. So I think we're probably going to hear about other companies in the very near future trying to do something like this. It's usually a way to try and get your coin to be in the news, to be in the spotlight. Many companies that we've heard of thus far, when they announced that they were going to be creating a Bitcoin reserve or a treasury, their stock price rose quite rapidly. So this is, I think, a lot of what we're trying to see is these other companies creating other companies and then talking to other companies just so that they can also try and get a push up in price. But this is once again that Wagyu with that like Dorito kind of thing. There's no reason to like buy Avalanche. No one's talking about Avalanche. And if you have Avalanche and if you love it and if you think the protocol is beautiful and it's wonderfully written in code, cool, awesome, amazing. But the other side of it is that there's so many other coins that are more looked at, more used. Like this could have even been Polygon and I would have slightly understood. It's like the scaling mechanism on top of the most used blockchain, Ethereum. Avalanche? Okay, well, I guess as a foundation, you have to find a way to, get your coin into the news, but there are so many other coins to actually invest in that are, okay. All right, everyone. I think that's going to do it for this video. Always weird stuff happening within this market. I assume tomorrow's going to be the same. I do sincerely hope that you've all enjoyed. I do hope you all are having a great day, morning, afternoon, evening, wherever you are, wherever the heck you might be. I do hope it is absolutely fantastic. Thank you all once again for watching, listening, liking, commenting, and supporting, and I will most certainly be talking to you all soon. See you.